Okay, let's unpack this. Welcome to the deep dive. Today we're plunging into the pre-market for August 19th, 2025. And there's a really interesting tension here. U.S. equity markets look set for a quiet, maybe slightly negative open. They seem caught in what we're calling data-dependent paralysis.
Yeah, that's a good way to put it.
It's this real tug of war, between surprisingly strong second quarter earnings and these, well, frankly, mounting worries about the bigger economy.
And what's truly insightful, I think, is how reluctant the market is to embrace risk, even with, really great micro news.
Right.
You've got 82% of S&P 500 companies beating profit estimates. That's huge. But somehow that good news is just getting swamped by these forward-looking macro risks. It's a bit of a paradox, really.
Absolutely. So our mission today is simple. Cut through that noise, pull out the key insights, maybe find some surprising facts, and help you understand what's really moving the market today and what you should be keeping an eye on.
Sounds good.
Okay, let's jump right into the numbers setting the tone. The day's direction, it's probably going to hinge on two main things. The July housing starts report.
Always critical for that rate-sensitive sector.
Exactly. And earnings from the big consumer bellwether, Home Depot.
Okay, so housing first. Economists are generally looking for starts around, 1.29 to 1.30 million units?
That's the consensus, yeah.
But the really important detail, the nuance you need to catch, is buried in June's report. Remember that. The headline number went up.
Right, but that masked something else.
It did. It masked the third straight monthly drop in the more stable single-family segment. The gains were all in that, much more volatile multifamily construction. So if we see single-family starts fall again today, well, that could really signal some entrenched economic weakness. Could definitely fuel those recession fears that are lurking.
And if housing is one piece, Home Depot gives us that other sort of unique view on the consumer, right? Their Q2 results, they slightly missed expectations, both on adjusted EPS and revenue. But what did you find most revealing in their numbers? Because there's more to it, isn't there?
Oh, absolutely. This is where it gets really compelling, I think. So customer transactions, the actual number of people buying stuff, that actually declined a bit, maybe 0.4% to 0.9%.
Okay, so fewer shoppers.
The average ticket size, how much each shopper spent, that increased, up 1.4% to just over $90. And even more telling, those big ticket transactions, sales over $1,000, they rose 2.6%.
So what does that suggest?
It points straight towards what some are calling a bifurcated consumer.
Yeah.
You've got maybe lower income folks pulling back their spending.
You feeling the pinch.
While homeowners who are maybe more financially stable and the professional contractors, they're still going ahead with those bigger projects. It really challenges that idea of just a uniform consumer slowdown. Shows pockets of surprising resilience.
That bifurcated consumer.
Yeah, that's a really powerful insight. Okay, let's shift gears globally. How are other markets looking, and are they giving us any clear signals for the U.S. today?
Well, it's a mixed bag, actually. Asian markets were pretty cautious overnight, kind of mixed. Seemed like they were mostly just waiting for cues from the U.S. data.
Okay, waiting game there.
But then you look at Europe. Equities there opened more positively. The stocks, Europe 600 was up about 0.3%. And that seemed linked to maybe some hopeful signs in diplomatic talks over the war in Ukraine.
So what does that difference mean for us?
It means, for you listening, that positive European open, probably not a reliable indicator of U.S. risk appetite today. The more cautious vibe from Asia, that might be a better reflection of the mood about the U.S. economy itself.
Got it. And what about commodities, gold and oil? Are they telling a similar story or something different?
Gold's holding steady, maybe ticking slightly higher around $3,338 an ounce. It's clearly acting as a safe haven.
But it's also, interestingly, aggressively front-running a potential Fed easing cycle, meaning investors are already betting heavily on future rate cuts, not waiting for the Fed to actually say anything definitive. UBS Global Wealth Management even boosted their target price to $3,600 by March 2026.
Wow, okay. And oil.
Crude's slipping a bit, down towards $66 a barrel. That seems weighed down by the possibility of more Russian supply hitting the market if those Ukraine peace talks actually make progress.
Okay, let's zoom back into the U.S. market internals. Futures, the VIX. What's the underlying pulse telling us about how investors are feeling?
Well, U.S. stock index futures are pointing to that slightly lower open we mentioned. And the VIX, the SIBO Volatility Index. It closed higher yesterday, Monday, up over 3% at 15.57.
So more nervousness creeping in.
Exactly. It indicates growing investor apprehension, maybe more demand for portfolio protection like options. Signals the market is definitely feeling a bit edgy.
And any specific company stories catching your eye? Any standouts reflecting this cautious but complex mood?
Yeah, a couple. Intel, INTC, is actually a top pre-market gainer. It's up over 5%.
Oh, really? Why's that?
Reports that the Trump administration is in talks to potentially take a 10% stake in the company. That's being read as strong government backing for the domestic chip industry.
Interesting political angle there. Anyone on the downside?
Medtronic, MDT. It's a top loser despite actually reporting strong earnings. Classic sell the news situation.
The good news was already priced in.
Precisely. So investors took profits after the official numbers came out.
Okay, so all these pieces, housing, Home Depot, VIX, individual stocks, they're all kind of leading up to a big event later this week, aren't they? The market's focus is already shifting.
It absolutely is. All eyes will soon turn to the Federal Reserve's annual Jackson Hole Symposium. Fed Chair Jerome Powell's speech there is, well, highly anticipated. Everyone's looking for guidance on monetary policy.
And the market's already betting on cuts, right?
Heavily. The CME FedWatch tool implies something like an 84-85% probability of a rate cut coming as soon as September. So expectations are definitely high for some dovish signals.
Okay, so let's bring it all together for today. Considering everything, especially that crucial housing data landing soon, what are the main ways this could play out, the key scenarios?
Right. Today feels like a pivotal test. I see maybe 3 main scenarios based on that housing number. First, a risk-off move if housing really misses estimates badly. That would likely confirm recession fears and hit stocks.
Okay, scenario 1.
Second, kind of a muddle-through scenario if the data comes in roughly in line with expectations. That probably just keeps us in this data-dependent paralysis we talked about. Market stays cautious, waiting for the next clue.
Right, more waiting.
Or third, you could get hawkish jitters. That's if housing significantly beats expectations. That would challenge the whole cooling economy narrative the market wants to see and potentially make the Fed's job harder, maybe delaying those rate cuts everyone expects.
So what does this all really boil down to? Today feels like a moment where the market's focus really pivots, doesn't it? Away from backward-looking corporate results.
Exactly. It shifts firmly from past corporate performance towards future economic signals and, crucially, what the Fed might do next.
Which raises a pretty important question, I think. Given this kind of high-altitude consolidation, the market hanging near its highs but clearly nervous, how long can it keep absorbing strong company profits without getting a clear signal, either from the economy itself or, some definitive word from the Fed?
That's the million-dollar question right now. How long can this tension hold?
So, something for you to think about. Consider how these different forces, the strength you see in some company results versus the big picture economic uncertainty might affect different parts of the economy and maybe even your own financial decisions, especially as we all wait for more clarity from the central banks.